All of the big US stock indices fell at the open. In fact, the circuit breakers kicked in because they all went below 5% at the get-go. At one point, the Dow Jones was off some 10%. All of the US stock indices, as I say, the Dow is down some 30% from its most recent peak. They're all of them solidly in bear market territory. And I think really what's triggered this latest sell-off is the fact that overnight we got this emergency action from the US Federal Reserve, cutting interest rates in the US by 1 percentage point, effectively to zero, also restarting its asset purchases, quantitative easing in the jargon, to the tune of $700 billion US, a massive sum of money to throw at this problem. Coordinated action from the Federal Reserve, the Bank of England, the Bank of Canada, the European Central Bank, the Bank of Japan and the Swiss National Bank, all aimed at getting money going through the system, ensuring that there's a supply of dollars regularly. Unfortunately, all it's done is really spook investors and just made them think, well, crikey, how bad is the situation that we're getting this sort of coordinated action? So at the moment, there doesn't really appear to be much of a flaw. If you look at the FTSE 100, it's been flirting all day long with the 5,000 level. It actually dipped below that at one point. We're revisiting levels seen last in October 2011. You have to go that far back for how long the FTSE ago before it was at this sort of level. Likewise, the oil price, a lot of strains there, massive oversupply with the Saudis pumping more crude in an attempt to squeeze Russian and US shale producers out of business. At the same time, there's a big drop-off in demand due to coronavirus. Accordingly, you've seen a barrel of Brent crude flirting with $30 a barrel, really struggling to hold on to that level. So the stresses and strains really being felt right across financial markets everywhere.